Hi, I'm Dominic Picardo here for Spreadbet Magazine. It's Friday, the 3rd of August, and today we're talking about Facebook. And it's a very appropriate time to be talking about Facebook because this afternoon a good percentage of the nation's workforce will be looking at Facebook website rather than doing what they're supposed to be. Today, though, we will be looking at Facebook stock rather than Facebook's site. Facebook appeared on the stock market back in May time amidst a huge fanfare, loads and loads of hype. And I can sort of understand the hype because personally I am a huge fan of Facebook, the site. I can't get enough of the random trivia about the lives of my friends and indeed the many other people that I'm linked to on Facebook. As a business model, though, I have to say I really don't get it. And neither do a lot of other people going by the state of this chart. The stock started out up around $40 or so, and since then it's plunged to around $20 or so, which is a huge loss in the time involved, even allowing for the stock market volatility we've had during that period. And still, there are some plus points here. This, as a phenomenon, as a social craze, Facebook continues to grow. It's still adding lots and lots of new users. It does pull in some money, and that money is still growing at a tidy pace, although the rate of growth is slowing, and at the same time the company's costs are growing. The really big problem, or one of the biggest problems, is the question mark over advertising on the site. Advertising is obviously the key way these guys make money. And first of all, nowadays, lots of users use mobile phones to get on Facebook, and this makes it harder to bombard them with adverts. And also, at the same time, a lot of advertisers complain that Facebook is not as effective a way to reach existing customers and new customers as other means, especially like Google, which is obviously the big internet advertising phenomenon of all. From the point of view of technical analysis, rather than just looking at the business, we obviously don't have very much to go on. We only have a couple of months of trading data, and this obviously creates loads and loads of problems for the chartist because there aren't that many historic levels for us to reference and to use as support and resistance as price targets. However, clearly we are in a very, very strong downtrend here, and this obviously creates a potential short trade or somewhere along the way. You want to be trading with the trend, and that would be especially given my bearish views on the stock. That's really the only sort of trade I'd be contemplating here. But the thing is, after this massively strong fall, if we look down here at the daily relative strength index, you can see that Facebook is already very oversold, an RSI reading around 20%. And when it last got down to these levels back in sort of early mid-June, then the stock, even though it did manage a decent rally, went sideways a bit and then resumed its downtrend. So when a stock becomes oversold, even though it can get even more oversold, one will generally look for a bounce back. Whether it would get all the way back up here, I have sort of serious doubts. That would mean it would have gone up around 50% or so, and it's quite hard to see that happening as of this stage. But I do think we could get some form of smaller rally between now and then, and for that purpose, I would turn to the intraday charts in order to judge my entry level. So here we've got the 4-hourly charts of Facebook stock, and this is one of the key charts I use for intraday trading to judge entry and exits. And on this chart as well, Facebook appears as very oversold, a similar RSI reading to what we've got on the daily chart. So as to the levels which I would typically use for these sort of intraday trades, I would like to see Facebook have a decent bounce, maybe to the 4-hourly exponential moving average, or possibly even this 21 4-hourly exponential moving average. And what I would wait for is the stock to get up to around here, maybe poke a little bit through, and then as it begins to sell off back through that line, that to me would make a logical moment to go short. Price targets are difficult to come by, but I think Facebook, especially given the just as there's a lack of technical levels from on which to base our view, I think fundamental investors are going to have difficulty pricing this stock correctly. And as a result of this difficulty in pricing share or valuing Facebook shares, the stock is likely to head well below these levels of around $20 per share. We'll keep an eye on this one, but I hope you can join me again next week.